Hello friends, I am CS Dr. Rajkumar Kankariya and I welcome you to my video lecture series on financial management based on SPPU financial management syllabus. So today we are going to learn leverage analysis, and leverage analysis is nothing but risk analysis. ऐसा कहते हैं कि अगर इश्क है तो रिस्क है और रिस्क है तो इश्क है. बिजनेस में भी रिस्क है और बिजनेस में भी इश्क है. If you want to get profit, if you want to explore the opportunities, you have to get the calculated risk. You have to understand the magnitude of the risk. So to explore this risk mechanism, to understand the leverage analysis, let's get started with me in this video. अगर ये वीडियो आपको पसंद आए तो जरूर से लाइक कीजिएगा, मेरे चैनल को सब्सक्राइब कीजिएगा और अपने दोस्तों के साथ ज़्यादा से ज़्यादा शेयर कीजिएगा. So let us move ahead. Let's get started with leverage analysis. So to begin with leverage analysis, let us start by defining leverage. So the term leverage refers to the means of achieving power for gaining an advantage. It represents the impact of one financial variable over some other related financial variable. Leverage refers to the ability of a firm to employ long-term funds having a fixed cost to enhance returns of the owner, that is the shareholders. So there are three types of leverage analysis: operating leverage, financial leverage, and combined leverage. So operating leverage calculates the business risk and measures the relationship between sales and earning before interest and tax, which indicates the business risk. Financial leverage calculates the financial risk and measures the relationship between EBIT, earning before interest and tax, and EPS, that is earning per share, which indicates the financial risk. And the combined leverage, it's a combination and mix of operating leverage and financial leverage, that is a total risk, which measures the relationship between sales and earning per share, indicates total risk, that is a combination of operating risk and financial risk. So in conclusion, operating leverage, financial leverage, and combined leverage, amongst that, operating leverage assesses the impact of fixed cost on operating income. Financial leverage is the use of debt to boost returns while simultaneously increasing the risk. Combined leverage assesses all components and overall risk. So let us take the practical problems on leverage analysis based on SPPU MB examination. So to begin with the problem and solution from the SPPU examination, let us understand the profitability statement, pre-requirements to solve the problem. So this is very important profitability statement, which gives you the required figures, that is earning before interest and tax, earning before tax, then profit after tax, then earning per share, which is required according to the formula for calculating these leverages. So here you can see in the particular column, the first figure is the sales, then the variable cost, followed by that is contribution. It's when we deduct variable cost from contribution, variable cost from the sales, we get contribution. When we deduct fixed cost from the contribution, we get EBIT, which we call it as operating profit. After deducting or subtracting the interest from this, we get earning before tax, that is EBT. While deducting tax from that, we get profit after tax. That means after deducting tax from earning before tax, we get a earning after tax, that is profit after tax. So this amount is the right of the shareholders. There are two types of shareholders. The first is the preference shareholder and the second are the equity shareholders. So preference shareholder gets the So friends, let me share the presentation again. So here what we get are the important figures which are required for the calculation of leverages. So this portion is going to give you operating leverage. The half of the portion is going to give you financial leverage. Combining this, the arrows are indicating we're going to give you combined leverage. Now let us see what are the formulas to calculate different types of leverages. So to calculate operating leverage, we need to divide contribution by EBIT. Then to calculate financial leverage, we need to go for a formula EBIT divided by EBT, that is earning before interest and tax by earning before tax. Then combined leverage is the mix of operating leverage and financial leverage. Then to calculate the magnitude of operating leverage, we need to consider the percent change in the figures. So percent change in EBIT divided by percent change in sales is going to give you degree of operating leverage. Then percent change in EPS divided by percent change in EBIT will gonna give you degree of financial leverage. And either you can multiply both this degree based operating leverage and financial leverage formula to get the degree of combined leverage, or when we divide percent change in EPS divided by purchase percent change in sales, we are going to get degree of combined leverages. So these are the formula which will be helpful for the analysis and calculation of leverages. So let us move ahead with the problem. There is one profitability statement which we need to understand to go for calculation based on the leverage analysis. So this is a profitability statement. In this statement, we will calculate operating leverages, financial leverage, and combined leverages. So let us take one example, one problem which has appeared in SPPU's April 2023 examination based on MB 2019 pattern. The problem given in the examination was as like this: a simplified income statement of XYZ is given below. Calculate degree of operating leverage, degree of financial leverage, and degree of combined leverage. So XYZ Limited has given the simplified income statement that is will be helpful for the profitability statement calculations. So they are given all these figures: sales, variable cost, fixed cost, EBIT, interest, taxes at the rate 30%, and the net income. So let us calculate. So here you can see in the solution, we have designed a profitability statement. In that, we have put the figures, which is already given: sales, variable cost already they are given. So based on that, when we deduct variable cost from sales, we get the contribution. Here the contribution is 2,83,000. When we deduct the fixed cost, we get EBIT, that is operating profit. This every figure is being given in the problem. After subtracting the interest on long-term loans, we get earning before tax, that is EBT. In some books, it is called as PBT, that is profit before tax. After deducting the tax, here at the rate 30% tax is given, the amount is also given 29,400. So we're going to get profit after tax 68,600. So we have got very important figures in this. One, the contribution. Second one is the EBIT or operating profit. Third is the EBT, right? So by putting this figure in the formula, the formula for calculating operating leverage is contribution divided by EBT. So contribution here is 2,83,000 divided by 2,08,000 EBIT. So we are going to get 1.36.
So we will define it as in times. So 1.36 times is the operating leverage. For financial leverage, we have the formula EBIT divided by EBT. So we'll put EBIT once again 2,08,000 divided by EBT, that is 98,000. So we will get 2.12 times the financial leverage. To calculate the combined leverage, we either will multiply both these figures, we'll get this amount, we'll get this figure, or we'll put the contribution divided by EBIT. Here you can see again we are going to get the C figure 2.89. We'll divide in times. So we are, in this way we have calculated operating leverage, financial leverage, and combined leverage. Now the one question arises in our mind: what about the degree? Degree of operating leverage or degree of financial leverage or degree of combined leverage comes into picture when there is a change in figures like sales. Say for example, here the sales is 10 lakh 50,000 and it has increased to 50 lakhs. So the changed amount, how much is the change and what change of sales is going to impact the either the contribution or EBIT or operating leverage or financial leverage, that we need to understand. Hence, we need the change dynamics, change figures to understand the degree of these leverages. So in this problem, that is not been given. So we'll rest with the solution. Thank you. Let us move ahead for the next problem, which I'm just going to highlight. I have given the problem over here. This is a very simple problem given in the university examination for November 2022 paper in May 2019 pattern. So from the following information of PGK Limited, calculate operating leverage, financial leverage, and combined leverage. They are given interest, sales, variable cost, and fixed cost. So the solution is given here. Again, we have prepared the profitability statement. In this, all the figures which we are given, we have put, right? They are given the sales, interest, variable cost, and all that. So after putting these figures, we will get this table, and by putting all this in the formula which we have just now discussed, we're going to get these operating, financial, and combined leverages. So thank you so much, friend. I hope you could understand what is leverage and what is the magnitude of leverage and how to calculate different types of leverages, maybe operating leverage, financial leverage, and combined leverage. If you like this video, please do subscribe and like this and share it with your friends so that they'll be benefited out of this. जरूर इस चैनल को सब्सक्राइब कीजिए, लाइक कीजिए और आपका कीमती वक्त देने के लिए बहुत बहुत शुक्रिया. थैंक यू सो मच फ्रेंड्स.